The tweet guy has arrived in Dubai.
Salam alaikum.
Alaikum assalam.
Yeah, okay.
Kif halak?
Shukran.
There you go. Very good. We're in Dubai, Middle East Fund Forum 2013, and we're going to talk about futuristic things in a futuristic place, such as is Dubai. What's your first impression?
It is very futuristic. You know, you arrive here and you think it's got all the same components you get in Wall Street, Canary Wharf, City of London, big tall buildings, very, very busy. But the difference is that everything is 10 times further apart. So it's got a lot more space. It's got, you know, a very, very different atmosphere.
Yeah.
It's the same ingredients, but when you mix it up in a different cultural setting and you put that architecture together differently, you have a totally different impression. Very, very exciting place to be.
I love the way you said it's like an orchard of amazing buildings.
It is. It's not like you're in an
orchard.
Yeah, it's not like you're being squashed by these things. It's like you're walking through a lovely, wide orchard of these incredible things. You know,
and they've only just begun.
Yeah.
So there's more on the way. We're going to talk about the need for new shelves for investment products. Now, this is what we're facing. As always, new generations come into play, and you know it's really the older generations that have to adapt to the new generations because, you know, guess what? They own the future. Duh. What we're noticing is that kids don't really understand investment products. They've sort of fallen out of love with the industry in the first place. And on top of that, if you go out to a place where there is a lot of youth, such as, for example, Asia or Africa, they don't even know what a fund is. They don't care about it. And then increasingly we also saw that Asia, it's more like a DIY environment. When you have money, you just go to markets. And apparently research is showing that there is a market for that expertise and that advice.
Yeah.
All right. So we were talking earlier about how we've seen this before in another industry.
We have. I think it bears a lot of similarities to what's happened in the digital entertainment business, particularly music.
Yeah.
You know, bear in mind, last year was a very special year for the music industry because it was the first time they saw an increase in revenue since 1999. So that's a good 12 financial years of a marketplace in decline.
That's coming out of the doldrums of a total identity crisis, though.
A total identity crisis. 2005 piracy peaked. It's halved since then. And why is that? Why is that? You know, the music industry got it wrong because they looked at the issue of digital piracy and they thought it was a copyright problem. But it wasn't. It was a shift in the basic nature of the ecosystem. Right? People's habits were changing. The way that they bought digital entertainment, the way they bought music had changed. It had become device specific. It had become networked. They were not buying the physical product. They weren't shipping CDs. They wanted to download stuff. And the thing is, unless you had a store where you could download stuff, they weren't going to buy it from you. Who was downloading the stuff? Pirate Bay. That's what you were getting. You were getting it on YouTube, you were getting it on Pirate Bay, you were getting it from Napster, from free file trading sources. Now, yes, it was copyright theft, but it was actually something else. It's sort of the economic equivalent of civil disobedience. Yeah. Because piracy is halved as digital music channels have increased. Now we've got Spotify, we've got iTunes, we've got Pandora, we've got Netflix, we've got all these new channels out there. And don't think for a minute that the Hollywood studios and all the big 7 record labels don't wish that they'd thought that stuff up themselves, because they did. Yeah. When they came along, when they created a digital offering, then people stopped stealing the copyright and they were happy to pay.
Absolutely.
And there's an interesting thing in the ecosystem there, that actually people didn't just want music. They wanted the music they wanted to listen to on the device they wanted to listen to when they wanted to listen to it.
They took control, right? They weren't served things. It was actually the other way around. They enabled themselves to actually browse. I mean, the industry started buying separate songs. Yeah. Because they're like 3 songs on an album and all the rest was just noise to them.
Exactly.
And that's I guess, and so to bring it back to the investment management industry, I guess this is what we're seeing in that new world out in Asia where it's increasingly DIY, where people are sort of saying, you know, I get an internet company, I'll buy that stock, but really I don't understand this construction company. So, you know, you're getting more of that. So another thing that I think, so in the entertainment industry you had the file sharing platforms that came up. I think in finance, they haven't been paying much attention to the crowdfunding. Yeah. Because it's a similar thing, isn't it?
Exactly.
So the finance industry breaks down, or goes out of focus for whatever reason, and all of a sudden, all these businesses that need to fund themselves, they find another way.
Well,
they turn to each other again, and that's the same thing.
Financial services markets are not configured to deal with crowdfunding. It's a product they can't possibly understand because it's monetizing something that they've never thought about monetizing before, which is they monetize fans. You're monetizing people who want to support a project, and all they're getting in return is a unique thing. They're not charging basis points. They're not getting a percentage return on their investment. They're getting the first edition of a book. They're pre-ordering products.
And they get to influence what the product's going to look like, which is also quite interesting.
So the thing is, that kind of stuff is investable. You know, there are huge returns available here. You know, we're talking about putting small amounts of money into companies that have exploded. Some of them have become huge. You look at the Oculus Rift, for example, which was they only wanted $100,000. They raised $500,000. And now it is set to be launching on PlayStation. It's launching on Xbox. People are rewriting titles for it. It's been the biggest shake-up in the multi-billion-dollar global games
And the Pebble
economy.
Watch is another classic example. There's more and more of these things, right?
Yeah.
So I think what's the thought here that we extract with the finance industry? Well, I think first of all, this industry's really got to find a way to monetize its expertise and to engage with these platforms a little bit more, because we're not going to be able to continue shoving products down people's throats. People are going to want to take control, and we better help them, you know, improve their investment and their portfolios by essentially finding a way that they can buy our advice at affordable price. And like, you used to go to the record shop, a CD was $10, but today you like a song and it costs you 99 cents. So I think the thing is, the pie has become a lot bigger. And I think the finance industry's got to think like that as well. That
what
advice is more scalable.
Yeah, what fund managers need to do is they need to think a little bit like Amazon.
Right.
Think, actually, how can I configure the products to build around someone's individual taste, no matter how varied they may be. Maybe they're looking at funds that leverage clean water, and they're also looking at funds that, you know, are structured finance products, and they want somehow to blend those two things together because that's the way they want to slice up the pie. It's not available for them right now, but that audience is there, and they will buy it if they can configure it around themselves. You know, Amazon's the only place where you buy socks, washing powder, possibly pharmaceuticals, and you're almost certainly going to be buying music and electrical hardware there as well. It's the ultimate superstore. Why can't funds start configuring themselves like that around a customer's individual demands? I mean, certainly the guy in the street might not be buying it, but high net worth individuals pay huge amounts of attention to personalized services, and they're all online searching for the personalized services and the investment opportunities that meet their passions, not just their returns.
Interesting. This may sound like madness, it may be totally abstract, but it's really something that our industry has got to start thinking about. We have to pull our head out of the sands, right?
Yeah, indeed. And on that front, Masalama.